All right, so welcome back, guys. This is just a quick video update. The markets are really going in turmoil at the moment. Yesterday we had Trump, his Liberation Day speech where he announced tariffs, reciprocal tariffs on all or quite a large number of countries in the world. And the tariffs seem to be worse than expected. I just want to talk a little bit about the effect it had on the markets and what is likely to take place going forward. So, funny enough, actually, I was able to position in probably one of the best positions I've found in a long time, and I'm probably just going to hold this. This is when I get entries like this. These are the trades that I want to hold. I don't want to try and alter or get out of. The main thing I'm going to do really is monitor the daily chart. We had a bounce off the 20-day moving average, so this is a retracement level, and price should really just target these lows down here. So this is what I'm looking to get into. This is the target I'm looking to hold until. And obviously, as you can see, in the aftermath of the Liberation Day speech, in the aftermath of the announcement of the tariffs, the market gapped down, and in pre-market during London session, the market's down almost 500 points or almost 600 points. So the market's on route to a quite a substantial decline. I just want to talk to you guys a little bit about my trading account and what I learned this week, because earlier in the week I was positioning to get long. And the reason I was positioning to get long is because with major news events, particular news events, when there's a decline into the news event, like so, as we've seen over the past few weeks, potentially even over the past month or so, in anticipation of the tariffs, I assumed that, all of the information in regards to the tariff had already been priced in. So what I mean by that is when there's a decline in anticipation of a news event, the news event usually becomes a bad news event because we've sold into it. So that means all the information in regards to it is priced in, and investors they tend to price stuff in, and then after it's been priced in, on the actual day it becomes a bad news event. In the same way, certain aspects of the market get bought into, as we saw during the Trump election, and then on the inauguration, price started to decline. You can see that on Bitcoin. The inauguration was on the 21st. Price rallied into the inauguration and it declined on the inauguration day, on the exact day, 20th of January. So the market tends to price stuff in, and then when the actual news event occurs, it declines. So in this situation, I assume we priced in the tariffs already as we declined from February. We've been declining since February, or since the inauguration. We've been pricing in the tariffs, and then the actual announcement of the tariffs would have caused a bad news event. But in this situation, I came to understand that with certain aspects of macroeconomic policy shifts, and I actually had a conversation with ChatGPT about this, on certain macroeconomic policy shifts, as I mentioned here to ChatGPT, I assumed that the information had already been priced in. So I thought that the decline that occurred was wrong, and it was a bit frustrating. But I came to understand that sometimes the market can actually not fully price in a news event. So with institutional investors, they await the actual news event to try and price it in fully. And what we got yesterday was an example of that. Trump's tariffs happened to be worse than expected, and so because it was worse than expected, the markets are further pricing in a further decline. So I'm expecting price to continue going down low, and I'm positioned pretty much perfectly into the market. I got into this at 500, and let's have a look at what it says on my account. So I got in at 42,511 on a short position. I'm currently running profit 2,600. This is mainly because I got into it half my usual position size. So I had two opportunities to get in. The first one, I took a loss because I got wicked out. Usually this happens, liquidity sweeps. The second one was perfect, and the reason I was looking to get short was because I was targeting the previous day's highs. So this level here is the previous day's high, as you can see. At previous day's highs, there's always liquidity resting there, and also the market is in a steady downtrend, so decline or downtrend. So any rally that took place yesterday in anticipation of the news release was just a manipulation for price to continue down. So what I'm looking for now is for price to continue through this fair value gap quite aggressively in New York session, and then eventually we're going to target this level at the lows. I would really hope for this to occur prior to non-farms payroll tomorrow, so that I can exit prior to the news event. However, I'm willing to hold it through non-farm payrolls simply because I have such a wide I'm about 1,200 or 1,300 points in profit. So I can afford to risk a little bit based on the news. I'm not going to expect the market to rally up another 1,200 points and take me out. I'm really happy with my position. But yeah, the reason I've got moving averages on this chart is because I'm trying to gauge the momentum. And with the 20-day moving average, this is a pullback moving average. So you can see that we've held the moving average. And if you can't see, I'll show you a bit clearer. We've held the moving average. So this tells me that there's quite some momentum to continue to decline further and hopefully target our level of liquidity down here. So this is where I'm aiming to exit the market, take profits, and if the market declines this much, it should also get me to pass this funded stage, phase two as well. So that would be lovely. But at this current moment in time, it does not look good for the markets. I haven't yet gotten a sell signal on the weekly chart to indicate that the market is going to be in a further decline, or depression, I should say. But we could get that within the next couple of weeks. We could see not necessarily depression, but we could see aggressive bear market. And if we see an aggressive bear market, the first place we're targeting is the liquidity resting down here. So that's pretty much what I saw this week and how I played it. I could have played the week a little bit better. I shouldn't have traded on Tuesday because of the obviously the news event was yesterday, which was Wednesday. So I shouldn't have traded on Tuesday. However, there's certain aspects of the market that you can't always understand. Initially, you have to sort of experience it. And when it comes to longer term macroeconomic news events, these news events tend to be policy shifting news events. These news events, they require what ChatGPT or finance wizards have said is a gradual repricing. Whereas CPI, NFP, FOMC, these are usually more economic data driven, so it's an immediate reaction. The market reacts immediately to it, and I haven't actually experienced this sort of thing before. I've experienced obviously the elections, and I was able to price that in as well. But tariffs on a particular day where it's being announced is a little bit different. So yeah, that's what happened this week. That's what happened with ChatGPT. That's how I was able to navigate that and understand what was going on. And then because I watched the news event live, I was able to manage my risk so that I was comfortable with positioning short, because we all knew that the market was going to go aggressively in whichever direction it chose. I was more adamant that the market was going to go down than up, simply because I kind of realized that Trump was going to talk really bad in regards to tariffs. Initially, his first few conversations about tariffs were talking about the history of America, so it kind of guided us to that. And there were particular points in the day yesterday where we all knew that Trump was going to start being extremely bearish about it. And we started to see that around this point here. The market went up, wicked me out, and then it started to decline quite aggressively. So yeah, that was what happened yesterday, and then in the future session, the market gapped down aggressively as well. I don't think the market's going to see these prices for quite some time, if I'm being completely honest. I think once we break this fair value gap to the downside, I think we've got a lot of levels down here to try and take out. So it's going to be interesting how the markets play it. Probably going to be a medium term bear market over the next few months, and as you can see on the monthly chart as well, representing an opportunity for price to decline quite aggressively over the next coming months. So yeah, that's what I've got for US30, and that's how I played the tariffs. If you liked the video, please hit the subscribe button, hit the like button, and you'll see some more from me.